In today's market where technology is evolving at a pace the world has never seen, and global innovation is rewriting the rules of entire industries, two companies are quietly emerging in ways most investors haven't even noticed yet. Whether it is the rise of next-generation biotech tools or the explosive demand for ultra-fast AI data connectivity, these two stocks are positioning themselves right in the center of multi-billion-dollar trends, and the numbers behind their latest moves are far too compelling to ignore. So what exactly makes these companies stand out right now? Is it their breakthrough technologies, their expanding international footprint, or the financial signals hinting at where their industries are heading next? Today, we're breaking down two stocks every forward-looking investor should be watching closely. Imagine this. Two companies, worlds apart, both operating on the cutting edge of innovation, one in biotechnology, helping scientists decode the mysteries of the human cell, the other in AI infrastructure, building ultra-fast optical engines designed to power the next generation of data centers. Sounds exciting, right? But here's where it gets interesting. One company is established and steadily growing, while the other is early-stage burning cash, yet chasing a potentially enormous market. And the contrast between these paths is exactly what makes this breakdown so important. We'll examine their industries, analyze their financials line by line, compare strategies, highlight risks, and decode what these numbers truly mean for investors watching from the sidelines. By the end, you'll understand why these two companies are appearing on investor watch lists across the world. Before we begin, remember, this video is for informational and educational purposes only. It is not financial advice. Always conduct your own research or consult a licensed financial advisor. All insights here come from publicly available sources, including company reports, press releases, and industry data. If you find value in this analysis, please take a moment to like, share, and subscribe. Let us try to reach at least 500 likes. It helps the channel grow and allows us to continue bringing you high-quality market insights. Let's start with CTech Biosciences. CTKB, a company at the heart of cell analyses, biotechnology. If you've ever wondered how researchers study individual cells to develop advanced drugs and therapies, CTech is one of the companies enabling that work. Their flagship product, the Muse Microcell Analyzer, recently won the Biotech Breakthrough Award for Drug Discovery Solution of the Year, a strong validation of their innovation. Headquartered in the United States, CTech is actively expanding globally, with a new facility in Amsterdam that signals a bigger push into Europe and opens up new revenue opportunities. Now let's look at CTech's latest financials. In Q3 2025, revenue came in at $52.3 million, a 2% year-over-year increase. Not explosive growth, but steady and consistent. Revenue grew in the US, APAC, and other international markets, though Europe remained soft. However, the deeper story appears in their margins. Gross profit dropped 5% to $27.6 million, with gross margin falling from 56% to 53%. After adjusting for stock-based compensation and acquisition-related amortization, margins sit at 55%, down from 60% last year. In simple terms, expenses are rising faster than revenue, something that can pressure profitability if left unchecked. Operating expenses totaled $36.7 million, a 10% jump year-over-year. R&D decreased 9% to $9 million. Sales and marketing fell 6% to $11.7 million. But general and administrative expenses surged 47% to $16.1 million, largely because of litigation and one-time charges. As a result, CTech posted an operating loss of $9.2 million, compared to $4.2 million last year, and a net loss of $5.5 million, versus last year's net income of $0.9 million. But there's a crucial positive. CTech holds $261.7 million in cash and marketable securities, nearly unchanged from last quarter. This strong cash position gives the company strategic breathing room to expand, innovate, and weather short-term challenges. They also reaffirmed their full-year 2025 revenue guidance of $196 million to $205 million, representing growth ranging from -2% to +2%. Overall, CTech's story is one of innovation, stability, global expansion, but also profitability pressure and weaker demand in Europe. If you're finding this breakdown helpful, please take a moment to like this video and share. It helps more than you know. Now it's time to switch gears and dive into Poet Technologies. Poet, a company that could play a major role in the future of AI infrastructure. Poet is developing optical engines that simplify ultra-high-speed data transfer, a critical bottleneck for AI systems worldwide. Based in Canada, they operate in the optical interconnect and AI hardware space. Their technology enables data centers to move information at staggering speeds, 800 gigabits to 1.6 terabits per second, essential for next-generation AI workloads. They've also formed partnerships with giants like Foxconn and SEC, which strengthens credibility and opens the door for massive industrial scaling. Poet has been moving fast. First, they closed a $150 million oversubscribed registered direct offering, meaning investors were willing to buy more shares than the company originally planned, a strong signal of confidence. They also secured an additional $75 million investment aimed specifically at accelerating AI connectivity development. This level of funding gives Poet the firepower needed to push its optical interposer platform toward commercialization. Then came a major milestone. On October 22, 2025, Poet received a $5 million production order for its 800G optical engines. Not a test order, an actual production-level commitment. This means real customers are prepared to use this technology inside their systems. They've also earned industry recognition, winning the Most Innovative Award at ECOC 2025 and launching 1.6T optical receivers with signals that industry players are taking them seriously. These developments suggest Poet is transitioning from research mode to early commercial traction. Combine that with growing AI demand worldwide, and the story becomes even more compelling. Financially, for the quarter ending June 30th, 2025, Poet reported $268,000 in revenue, up from zero the previous quarter. Their net loss widened to $17.26 million, up from $7.98 million, and operating expenses increased to $9.3 million. Loss per share rose from 0.14 to 0.21. Yes, Poet is burning cash, and at a rapid pace. But for early-stage tech companies chasing massive markets, this is expected. And the potential upside is huge. The optical interconnect market could reach $26.35 billion by 2030. With $150 million raised in October and another $75 million prior, the company now has liquidity through 2026, crucial for scaling in an industry moving this fast. Poet represents high risk, high reward. Revenues are small today, losses are large, and execution must be precise. But if the AI connectivity market explodes, and Poet captures even a fraction of it, the upside could be significant. So where does this leave us? Two companies. Two completely different paths. Two completely different risk profiles. CTech, steady growth, strong cash reserves, proven products, moderate risk but facing profitability pressure. Poet, early stage, highly innovative, aggressively funded, positioned for AI megatrends but carrying substantial near-term risk. Which is the better choice? That depends entirely on your risk tolerance. Are you someone who prefers stability and steady expansion, or someone willing to embrace uncertainty for the possibility of outsized long-term gains? In the end, CTech Biosciences and Poet Technologies offered a fascinating case studies in innovation, one stabilizing its global presence, the other building the infrastructure of the AI-driven future. Both have their strengths, both have their risks, and both are worth watching closely from an educational and analytical perspective. This video is for educational purposes only. It is not financial advice. Always do your own research or consult a licensed financial advisor before making any financial decision. If you enjoyed this deep dive, please like, share, and subscribe for more high-quality analysis of emerging companies and global investment trends.